Hey everyone. So I'm out on the road today, going to go take a look at some properties, and I thought I would kind of give you my criteria for investment properties. And a lot of people wonder what makes a really good investment property, and so why not have a conversation while I'm on the road? So here's one of the things that I look for always is affordability is very important, but most importantly, cash flow. And the difference between a real estate investor and a real estate speculator is the fact that a real estate speculator is looking for the appreciation, the equity increase as just from value, not really about cash flow. In fact, if we focus on areas like the big cities like Toronto, for example, or some of the other areas throughout Canada and the U.S., Vancouver included, New York, a lot of these places, most people when they buy something, they're only focusing on the value going up. That's where they're doing the real estate speculation. So if they talk about real estate speculation regularly, then we can look at markets that can downturn. But in most cases, that means they've got negative cash flow. And negative cash flow doesn't help anybody, quite frankly. If you're just starting out and you're buying your first investment property, it's hard to qualify when you've got negative cash flow. But on top of that, how long will you have negative cash flow? And ideally, the reason why people do it is because they are going to sell the property at a later date. Now, if that's really your purpose of selling it, then you're looking at capital gains as well. So that kind of negates the whole idea of having an investment property. See, when you talk about real estate investment, the most important thing, obviously, is securing a good tenant. It doesn't matter if it's residential or commercial. But on top of that, we're looking for mortgage pay down over a period of time. Whenever you talk about leverage in investment real estate, we always want to put as little as possible down to get positive cash flow. So when people start saying, hey, Todd, maybe we should put, 50% down. Well, that doesn't give you the greatest of returns. So we'll try to focus on, obviously, the bare minimum to have positive cash flow. Now, as we all know, based on the run-up in the GTA, the Vancouver, New York, San Francisco, all the world markets, we've seen some of them plateau. We know rents are going up, but still, no matter what, prices went up faster than rents. So negative cash flow was very common. So when we take a look at the outer markets, I call them the suburbs of the suburbs, but when we take a look at these marketplaces, we start looking at the price versus rent. And this is where we start looking at positive cash flow. And this is very important because down the road, ideally, what you want to be able to do in the future is to be able to refinance the property after so many years. Now, I know a lot of people and a lot of our investor base, they take 5-year mortgages, which is normally my advice for people. 5 years will give you some great pay down. If you're working with a 25-year amortization, ideally, you're going to probably pay off about 20% of the mortgage. Throw in some positive cash flow, and then you watch the values go up. Your rate of return in most cases with 20% down residentially it will exceed 25%. 25% annually is your rate of return, which is exactly what you want to target. But when we talk about dollars and cents, it's important that we analyze, obviously, what kind of investment real estate you're buying. But there's a couple other factors that we've got to talk about. Who are your tenants going to be? If you're thinking of student rentals, for example, and because of COVID-19, when we take a look at the 2021 school year, there's going to be a lot of people that aren't going to be utilizing student rentals. And so this means that if you are a landlord for student rental properties, you're probably going to suffer pretty much. So who are the people that you want to attract as far as tenants? My big take always has been mature tenancies. A lot of times people are already on pensions, they could have some government subsidy, but ultimately in the end, we're looking for tenants that we know are going to be willing to pay, that it's affordable to pay, and that aren't moving around a lot. Because keep in mind, every time you turn over your unit, it costs money. And so these are the kind of things that if you're going to be a real estate investor, you should have your checklist out. Now, on top of that, when we take a look at investment real estate, we also want to talk about repairs, right? Because repairs are paramount when we talk about, the aging of properties. So one of the things that we know for a fact is that when something has granite countertops, stainless steel appliances. These properties can get damaged more than just, let's say, an average property. So keep in mind on the upgrades in an investment property, because if something does go wrong and something gets damaged, you're going to be the one that's going to be stuck having to pay that extra money to get it fixed. And unless you've done your due diligence with your lease, meaning that you have them sign off on everything, then you're going to get stuck paying a big dollar to do the repairs, because, quite frankly, you're going to have granite countertops and then all of a sudden replace it with just a Formica countertop. You did this for a reason. So again, I like just kind of average, but more importantly, I like things that are low maintenance. So again, taking a look at condominiums, if that's something you're going to invest in the outer market, condominiums with very little amenities is probably the way to go, because we know that our condominium fee is going to stay fairly stagnant. We don't have a lot of repairs. We're not worrying about a concierge, underground parking, those kind of things. So these are all some of the things that I do with my checklist when I go to look at properties, and going on the road and taking a look at the outer markets. First and foremost, it's great to see, because you can actually get a really good gauge of the tenancies that are out there. Plus, we can talk about employment, what the area has to offer. As I mentioned a little bit earlier about COVID-19 having an effect on the student rentals, COVID-19 is going to have an effect on every single rental, and more importantly, about home ownership as well. So this pandemic, I think, has changed people's perspective and really how important a home is going to be. So now as a landlord, you are now going to have an opportunity to probably pick and choose your tenant. Now, I know a lot of people were concerned about the situation with no eviction allowed. In most cases, I can tell you the outer markets don't suffer the way the downtown core does, because with the CERB only giving people $2,000 a month and the rents being $2,500, this is where people are running into trouble, and people are basically walking away saying, yeah, I'm not going to pay the rent because I got to eat. But when you take a look at the outer markets and you're looking at rents, let's say around $1,000, and again, remember, your price point's much lower, then ultimately in the end, we're looking at people that are able to pay, willing to pay, and want to stay put. So again, talking about my checklist, these are a few of the things that I like to go through. I'm not too concerned about buildings being a little bit older, because quite frankly, if they're maintained, buildings can last forever. Now, when we take a look at some of the new construction, I got to tell you, it's not built nearly as good as some of the old stuff. So I'm okay buying some of the older stuff, because it's a lot easier to fix. And again, without the amenities, we're not worried about having to, always be upping the condominium fees, things like that. Now, when we talk about commercial real estate, there is consistency in some commercial real estate, but you have to decide what marketplace you really want to get into. Residential is the easy step in. Commercial qualification for mortgages and things like that, a little bit more difficult when you first start out. So for those of you that want to become a first-time investor, I'd encourage you to go residential first. And that gets your feet wet. If you're going to manage yourself, of course, this is one of the important things. Make sure you do your due diligence. Make sure you've got proper leases. As most of you know, I'm launching the Simple Landlord, and that's going to enable people that are managing themselves to have a backup, somebody that's in place to take care of the paperwork for them. So that's one of the things that we're going to obviously be offering to everyone to be able to do it. Now, the Simple Investor product is hands-off. We do everything, so nobody has to worry about that. But when you're out there on your own, one of the important things is that you've got to be able to discern, is this going to be a good property? Do I have a good tenant? Can I read all the information correctly? What about their lease? What about their expenses? Can you turn around and break it down? I am going to be offering a course shortly. It's going to be web-based, webinar-based, and it's going to teach people to do what I do. And it's going to be really exciting stuff. So I just thought I'd give everybody a bit of a list. As I said, I'm on the road, going to go take a look at some properties, and I just want to give everybody kind of an update on what you should be looking for. As we emerge out of this funk of COVID-19, I want to convey to everybody that I believe that the markets are going to stay strong. In fact, we're looking at the numbers coming down through all the real estate boards, and they are exceptionally strong. So, all this, doom and gloom, the truth is everybody's got to live somewhere. It's a life necessity. And with technology changing so much, I mean, look, I can talk to you right here and I can film while I'm driving down the road. But you always need a roof, a physical roof over your head. Doesn't matter if you're a tenant renting, doesn't matter if it's your own home. Everybody requires this. So this is the kind of thing that I think, no matter what, the pandemic is actually showing why real estate is more important than ever. And as we continue forward, I'm going to keep you up to date on what's going on. But today, I just thought I'd give you a quick breakdown on how you look at real estate, investment real estate, more importantly. And you know what? As I said, I'll keep you up to date. Hey, if this one pans out, we may have a new release coming out to our investors real soon. And I'll let you know how I do. Anyways, thanks for tuning in.